Booking Holdings reported Q1 earnings. You will discover in this video everything about this earning, why the stock fall by 4% after market, okay, when they reported the earnings. And we will discover everything from these earnings, all you need to know from the growth, the margin, capital allocation, guidance, and value, because it's a company that I have in my portfolio, so obviously I'm following it closely. So the revenue expectation were 17 billion and they reported 24.8 billion. So it's a solid outperformance here. And the EPS expectation were 4.6 and they reported 4.76. So it's really good. Even if they did better than what was expected, the stock still fall by 4%. It's difficult to understand why, but I think it's mostly because of the guidance you will discover. So the first thing we can see in the growth that the year-over-year room night grew by 7.2%, rental car days grew by 7.7%, airline ticket by 45%, gross booking for merchant grew by 21%, and for agency decreased by 12.8%. The agency, it's normal that it's decreasing because booking is focusing on growing the merchant one. Why? Because merchant booking receives the money and then they pay the hotel, the host, and so on. While with agency, booking don't have anything, they just book, the people book by booking platforms, they pay at the hotel or for the service, whatever, and then the one that receives the payment will pay the commission to booking. So it's always better to have your cash, okay, to have the cash in your hand and to decide when you pay, who you pay, and so on. So it's good that the merchant part is growing by 20% per year and the agency part is decreasing. It's something good, and especially that it's growing faster than the agency is decreasing. Now you can see that the merchant part, the growing start to slow down a little, not very bad, okay, it's still 20% plus growing, but it start to slow down. So this may be an indicator that the future we probably will have less, we will see, okay. Total gross booking grew by 7%, okay, and on a constant currency basis by 10%. And the total revenue grew by 7.9% and by 10% on constant currency basis. You can see that the net income decreased by 57% and the GAAP EPS, okay, decreased by 55%. But when you do adjusted, it grew by 22% and EPS by 21%. Why? Because they had a few things that came to decrease it. First of all, you had the foreign currency transaction loss, okay? You had amortization of debt, discount and change in fair value of the conversion option related to the convertible senior notes, okay? You had those things, okay, that won't change. When you adjust the net income, you have 821 compared to 708, so it's a growth rate of 22%, okay? Even if you don't want to adjust, you can look at the operating income that grew by 34% year over year, and the operating expenses grew by 2.1%. You will have operating expense growing by 2.1% and a total revenue growing by 7.9%. It means that the company is getting more and more profitable and more efficient. You can see here the net income decreased by 57% and grew by 16% here if you do adjusted. So when we look at the margins now, let's look at the margins. Operating margin were 22%, up from 17.9%. So they're growing their margins. This is something we want to look at. And particularly, we like the fact that it's over 15%. Now it's over 20%. So it's becoming very efficient. Capital allocation, they have almost $26 billion authorization for share repurchase. They did 2.1 billion buybacks, okay, up from 1.8 billion year over year, okay, for the last quarter last year. And the dividend grew by 6.7%. I'm fine with the dividend growing slowly like this because I would rather them to do more buybacks than paying this dividend. So it's fine. The guidance, and here's why I think maybe it has been declining a bit. The stock is falling 4%. is they report a guidance for room nights booked for the Q2 between 4 and 6%, gross booking 10 and 12%, revenue 10 and 12, and adjusted EBITDA 13 to 16. So I suspect them, especially for the full year guidance, I suspect people to be a bit afraid that there will not be much growth and will not be in 2-digit growth. Okay, the gross booking should be to mid to high single digit, so we don't even have a good guidance above 2-digit. Revenue mid to high single digit, okay, and adjusted EBITDA high single digit to low double digit. Okay, so we are far away from the mid double digit or high double digit here. It will be like between high single and low double digit, okay, and adjusted EPS low to mid tens. So that's the reason I think that why the company is not performing well on pre-market, okay, or after market hours. It's because those guidance, the market might think they're a bit low, okay. So the good thing with booking is they don't do high guidance and generally they beat them. So maybe they will beat them, but it may show that we will start to have maybe less people traveling, less people booking hotels and so on. Another expenses that we need to take in consideration in the marketing expenses that grew a little, okay? So they might need to continue to do marketing to be able to continue growing. Now let's come to the valuation, okay? So we are here on margin, the app that I'm developing. You can check the link below to join the waitlist. We are launching the app very soon now in the next few days. And we'll do the launch with the people first from the waitlist because we'll open only to 20 spots because we want to check if everything is working when we have more connection on it. And when everybody is here, we don't want to have any bugs or the app to be down. So we'll limit to 20% for the first opening. So it will be like this for the whole May. The next opening will be probably in 1 or 2 months after we do some modification and we implement as well new features because now we just have the first features, financial valuation overview, watch list and so on, and we'll add feature lately. You will see the page with everything detailed right after, but right now you can join the waitlist by clicking on the link in the description. That being said, with this valuation model, okay, for the net income for the next 5 years, if we estimate that the growth will be around 12%, the estimation are around 14% for the net income. They will do 4% buybacks. Generally, they do around 5%. So we'll say they do a bit less buybacks, so only 4%. The dividend will grow by 6% per year, and we'll have a P ratio of 22. The average P ratio is around 27. Okay, so we'll decrease the P ratio to 22, like 10 points more than the net income growth. I think it's pretty fair. And with the last earnings, the expected cumulative annual growth rate will be 12.47%, okay? Taking into consideration the last earnings that we got. So it's close to a fair value, okay? Around $4,800 seem to be a fair value if you want to do 13%. Now, if we put what everybody expect, let's say 14%, what is the expectation for the growth, and we have 5% buybacks, you could do 15% per year at this price, and the fair value should be around $5,500. Okay, I prefer to take margins of safety, so I will even put 11 here to have bigger margin of safety. And with this, okay, the fair value is around $4,600. Okay, so that's all for booking. Let me know in the comment section, what do you think about this company? Do you have it in your portfolio? And obviously join the waitlist for margin by the link by clicking on the link just under the video. Bye bye.